Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of finance. And today we're diving into something a little different. Bain Capital Private Credit's latest report. It seems like distributions are being declared and NAVs are being reported. But what does that really mean for investors and the health of the fund? Let us uncork this filing and see what Bain Capital Private Credit has been up to. First off, they re-talking about distributions, which is basically money paid out to shareholders. Specifically for their Class I common shares, a regular distribution was declared. Now, the key numbers here are the gross distribution and the net distribution. In this case, for Class I shares, the gross distribution was $0.1875 per S-share, and the shareholder servicing and distribution fee was zero. That is right. Zero, so the net distribution the shareholders will actually receive is also $0.1875 per S-share. This distribution is for shareholders on record as of the 31st of October and will be paid out around the 28th of November. This could be paid out in cash, or for those in their reinvestment plan, it will be used to buy more shares. Simple enough, they resharing some profits with their investors. Scroll NAV per share as of the 30th of September 2025. Scroll now. Let's shift gears to something called net asset value, or NAV. Think of NAV as the real value of the fund, S assets minus its liabilities, all divided by the number of shares. This tells you what each share is truly worth based on the underlying investments. For Bain Capital Private Credit's Class I shares, the NAV per S-share as of the 30th of September was $25.95. This is a crucial number for investors to track the performance of their investment. The report also gives us a snapshot of the fund's overall financial health. As of the 30th of September, the total NAV of the fund was a whopping $763.8 million. The fair value of its investment portfolio, meaning what all its investments are currently worth on the market, was $1.3674 billion. They also have debt with about $669.7 million in principal debt outstanding. This results in a debt to equity ratio of approximately 0.88 times. In simpler terms, for every dollar of equity the fund has, it owes about 88 cents in debt. They also mention a net debt to equity ratio of about 0.79 times, which accounts for cash and investments that haven't been fully settled yet. This suggests the fund is using leverage, which can amplify both gains and losses. Let's talk about where the fund is putting its money. The investment portfolio is valued at about $1.3674 billion, and it is spread across 141 companies in 26 different industries. Diversification is generally good, as it reduces the risk of any single investment going south and dragging the whole fund down. Looking at the breakdown of their investments, a massive 88% is in what is called first lien senior secured debt. This is typically the safest type of debt, meaning if a company goes bankrupt, these lenders get paid back first before others. They also have smaller stakes in second lien debt, subordinated debt, preferred equity, and even common equity. Interestingly, 93% of their debt investments are floating rate, meaning the interest they earn can go up or down with market rates. This can be good in a rising interest rate environment, but could hurt if rates fall. Scroll Class I shares BRI 331093551 Fondai P TDP dollar Soy P TD TDP 8 45.5.5 TD TDP million Fwani PD TDP million Fwan B TD Triforeign. Table. Finally, let's look at the ongoing offering. Bain Capital Private Credit is offering up to $2 billion in shares, and as of their recent subscription date, they've already issued shares representing a total consideration of $845.5 million. They plan to keep selling shares monthly. This shows continued investor interest and capital flowing into the fund. Their Class I shares have seen 331,09351 issued, bringing in that $845.5 million. So, what is the big picture here? Bain Capital Private Credit seems to be operating as expected for a private credit fund. They are collecting capital, investing it primarily in relatively safe debt instruments, and distributing returns to shareholders. The fact that they declared a distribution with no fees deducted for their Class I shares is a positive sign for those investors, suggesting efficient operations or perhaps a strategic move to attract more capital. The NAV of $25.95 per S-share provides a benchmark for performance. Their significant allocation to first lien senior secured debt indicates a focus on capital preservation while still seeking yield in the private credit markets. The debt to equity ratio is manageable, though it is always something to keep an eye on, especially in fluctuating economic climates. The continuous offering suggests they are still actively raising capital, which is a good sign of market confidence. However, A few things to consider are the fund S reliance on floating rate debt in a potentially volatile interest rate environment and the general risks associated with private credit investing, which can be less liquid than public markets. At this stage, the fund appears to be executing its strategy effectively, with strong capital inflows and a clear focus on senior debt. It is a solid operation, so far so good for Bain Capital Private Credit. Alright, that is our breakdown of Bain Capital Private Credit's latest filing. What is your take on these numbers and what they signal for the company? S future. Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.